All right, everybody, happy Tuesday. Welcome back to the Daily Profit Plan. Let's have a look. Let me grab the screen. Let's go right here. Perfect. Okay, screen share. Off we go. All right, let's get the chat up for everybody. Say good morning to the Daily Profit Plan community. Okay, chat's open for everybody. See the screen, Daily Profit Plan, Technical Tuesday. Looks like we're about to poke all-time highs once again. This trade deal with the European Union is getting the market as excited as it did last week with Japan when we were up 1.57% for the week. So we're looking at a slightly higher high. We have the futures market up around 0.19. That's S&P futures. We do have some overbought conditions, but it's not stopping the market. Here is the SPY. SPY pre-market is up to 638.20, which is right back up towards the highs. So high yesterday, 638.04. High this morning, looking at 638.20. Let me bring in some key levels here. All right. Dave, good morning. Dave looks like he had no problem with the link today. First person in the chat. Dr. Barnes this morning. Good morning. Andy, Donna, Snapper, Catherine, good morning. Kim, good morning. Phil, good morning. Fred, what's happening? Sam, good morning. Dean says, yo. Morning. Morning. All right. Nice to see everybody. Let's get some key levels. I do have an update to my charts here. This is actually pretty cool. So this is an upgrade to my dynamic trend chart. This is a 0DT, and we've got some all levels here. Let me show you the tool. So if I go edit, study, I'm going to focus pretty much exclusively on 0DT today, and also my ATR length. This will give me a couple really good readings on when the opening bell kicks in. It'll plot based on the previous day an average true range. And what's kind of nice here is if I see some of these big liquidity levels, i.e. this one here, and possibly this one here. It'd be a little easier if it was, not 5 lines to the upside, 5 lines to the downside. But point is, if we have within the ATR, you have like a 100% move to the upside, okay, and then a 100% move to the downside. If I see gamma levels that are in like the 50% zone or 50% zone of this ATR, there's about a 70% chance that directionally we can hit those levels. So 2 ways to trade those is we can trade to them. This is going to help me out. This modification by the team helps me out a lot for my double up service. So we can trade some of those like high reward to risk setups with a higher probability. And I just kind of patiently wait. It's been a difficult reading because we're getting either so many liquidity levels or ones that are so far out of the way that we're asking price to do something that's really not probably going to do. Right. So anyway, we'll see this in a little bit. I'll keep flashing back and forth between this and the levels that we've been talking about kind of every morning. So we have this one as well. So 63.80 would be our kind of sticky level today. 64.25. Just going to send a screenshot here. And we'll go to opening bell. Actually, I'll wait and see if this adjusts at opening bell, which is 23 minutes. Okay. Sam, that software is dynamic trend. If you have any questions on that, I have that at the very bottom here. So dynamic trend. I've got some information on that in my Discord channel. So let me know if you're interested. Or you can email me, chrispulverpub@gmail.com. Send me an email. But yeah, that's software I've had for like 5 years. I use it every day. And it certainly helps, especially in the 0DT space these last few years. It's been really critical. All right, so intraday levels, you can 6380 is kind of the sticky point between positive negative gamma today. We'll calculate based on a VIX, which is sub 15 now. My gosh, man. Um, as I said yesterday, and I mean this, I'm really just I'm probably gonna sell calls, but sell them at like high premiums. I'm not just gonna go out of the money and take on, hey, I can get 30 cents to risk $500 or 470. It's like that's a terrible trade. But like yesterday, we pulled in $1.25, I believe. Pulled in $1.45 yesterday, and that traded all the way down to like 30 cents, 40 cents. It actually stayed where we sold was 64.20. I mean, everything stayed below that. So if you held the trade we took yesterday for daily profit play, I mean, that was $1.45 credit per contract. I didn't hold it that long. I held it for what, maybe 5 minutes yesterday. It was crazy how fast that profit was. But we pulled a nice little chunk, and I like to kind of do the same thing, today. But based on the VIX right here at 14.83, we're going to see less than a 1% move. So let's go 0.92 to 0.93%. So I'm going to go ahead and plot from the close yesterday, 0.92 or 0.93. Yeah, let's go 0.93. So 0.93 puts us up around 64.48. So 64.45 to 64.50. Potential top area. And we'll go 0.93 from here. 63.30 again seems to be a big potential bottom. Just have a little bit of caution at the bottom because if the VIX is spiking higher, then that does open it up to go a little bit lower, right? If VIX jumps up to 16, all of a sudden we have like a potential 1% move from yesterday's close into that potential, bottom to have some reflexive guardrails for the day, right? So if we're opening up around 63.90, can I sell similar to what I did yesterday? Maybe the 64.20-25 area and trade that small with one contract. I'd like to trying to think. I'm not going to get enough premium out of the gates. If I did a, sell at the money at like 63.90, and this is one trade I'd love to get filled on one of these mornings. We're going to have to see the market pretty much go to like my top and bottom. But if I sold right here for my call, for example, I sell a 63.90 call. Okay. And then my put side, I sell a 64.50. What's the spread there? That's a 60 wide spread, right? 63.90, 64.50, that's 60 wide. So if I can sell a 60 wide and I can get for that trade like $55 credit, that means I'm risking $500. And as long as price stays below 64.45, if it stays below that, I make every dollar to the downside. So if we somehow got filled on this trade and it ended up closing at 64.25, what do I make on that trade? So I'll do the math. We sell, so I'll go to -1 at 63.90 and then a +1. So this is going to be a -1 is a sell. So that's a sell call at 63.90. A +1 at 64.45. Well, I'm sorry, 64.50. 50. So 50. Okay. And I get filled for 55 cents, $55 credit. That means my break even, I should just be typing this versus freehanding this. This looks ridiculous. $55 credit. So my break even would be 6,445. And my risk is $5. Okay. Can everyone read my chicken scratch? So this would be a great trade. $55 credit, $5 risk. And if we ended up closing back down to 64.25, okay, my break even's 45, we close at 25, that's $20 credit that I can walk away with for that day. Again, high reward to risk. There are ways to structure these trades. I was thinking about this just I drove for like 2 hours yesterday for I teach golf lessons sometimes the evenings, and it was a long night. I was back at like midnight last night, but I listened to a bunch of financial podcasts on the road, and it just always kind of gets me thinking about trade ideas. And this trade might happen once a month, once or twice a month, like when we have a big expected move, but we can kind of hit that top or bottom based on the VIX and see the market, head to that level and then reject, or head down to that level and then reject. This is one really good way I'd like to trade it. Even though it's like 60 wide, that's crazy. Yeah, but you're taking in so much credit, you're still keeping the risk very small. So if I get that opportunity, I'm gonna take that trade. And a lot of times that helps me stay, I can just sell at the money, which usually if we're looking at daily profit play or focus on kind of the out of money plays, right? So we'll see if we can get those, to fill one of these days. Or the flip side is you're just here and we're watching these levels and all of a sudden price goes to 64.40, 64.45, and you can just sell up top. You can sell a bear call spread, 5 wide or 10 wide and try to get a decent credit fill where your risk is smaller. If I can pull in if I do like a 5 wide spread and I can pull in $2.50 to $3, I'm at least, managing that risk a little bit better than going out of the money like we talked about, right? That was one of our lessons we had last week. What's the at the money, in the money, out of the money? How do we get the trade-off between probabilities and reward to risk? That's usually the trade-off. That's kind of how the scale flips. So if you want, high reward to risk, so you want big reward, right, for small risk, that's going to equal what? Big reward to small risk. That's low probability, typically. Okay. Now, I say that, but calling that kind of VIX-based high of the day and low of the day, that's not a low probability trade. That's just being patient because we don't see that hit very often. But when the market, we're looking at maybe something that can move 0.93% today. In order for that to happen, okay, how do you manage the SPX trade if price goes above your short call? It's a cash settled index. There's no assignment risk, so it just settles, right? Remember, if I sold that 63.90, that's an in the money or that's an at the money sell, but the spread if I'm getting $55 credit on that trade, that break even is all the way up because it cash settles. It just matters if I'm below my break even on that trade. Okay. And that would be Williams asking, what does that look like? That would just be, I mean, the trade I was just talking about would just be a simple bear call spread, but it's just super wide, right? If I did this trade, for example, if I, sell here for my call, so this would be a sell call, and then my width way up here, I do a buy call. That's nothing more than a bear call spread. Sell the call, buy the call, but I'm trying to go way up here to get my break even. And then if price can't quite get there, I keep the profit. If price gets there and rejects off of it, as long as it's below my break even, every dollar below my break even is $1 credit. So that's potentially one of those trades where it's like I risk 500. If it were to fill, like I risk $500 to potentially make, thousands of dollars. So, like I said, I get that that's a low probability fill, but I think a great trade with a pretty high reward to risk potential. So if it settles, you just take the loss. Well, where would it settle? Do you see what I'm saying with the break even prices? Look, let me draw this out. Why are we not understanding the break evens here? So if I go sell call at 6390 and we do a buy call at 6450. Okay. And this is the trade we take. And our credit is $55. Everything cash settles. There's no assignment risk. Everything cash settles. So if you take 63.90 plus the $55 credit, your break even on the trade, break even equals 6445. Okay, that's your break even. So any dollar amount, if price is at 6446, you're going to lose $100. If price is at 6447, you're going to lose $200. Okay, but every dollar, if it's at 44 or all the way down, even below 63.90, what would happen if prices, and everyone can answer this, what happens if price finishes the day less than 6389? If it's 6389 or less, what do we get on the trade? What's our take on the trade? If I'm selling a call at 63.90, buying a call at 64.50, and the price for the day closes at 63.89, our win is the full $55 credit. Okay. If it settles at, let's say we see the chart settle at 63, I'm sorry, 64, 64.32. Well, if our break even is 45 and we're taking 13 off of that, we're going to settle this thing for $42 cash for a $5 risk. That's a huge return, right? So we get $4,200 of profit for a risk that would have been about $500. So it's just playing the numbers where it's like, I know my sell, I know my buy, I'm trying to get a credit that would essentially be calling my top, right? That's why I would structure the trade that way. I'm going to take the trade today pending order. So what I'm going to do is look to sell a 6390 and buy a 6445 or buy a 6450 and try to do that trade. And that can just sit and marinate all day. Realistically, if we see the markets like running up here, if it ran here before like, let's say 11 a.m. or 11:30 a.m., there's a chance that that gets filled. Okay. Now, the chance of that getting filled is pretty slim, in all honesty. Okay. The whole point of that trade would be you take advantage of the fact that everything you do in SPX is cash settling. So, and you can close it out when you want to. You can manage the trade through the day. If you're in profit, you can manage the profit. But yeah, cash settle will be fine because what we're essentially doing is I'm pretty confident that the market's not really going to go much higher than 64.45 to 64.50 today. If it even gets there. Realistically, the resistance levels I see back again at 6,400, okay, which we did tap all-time highs yesterday at 6,400. We know that's a pretty big resistance level, okay? And then we have a 64.15 and 64.25. So starting at 90, look at the plus minus on the day. Is it possible that price gets to 64.25 today? Sure, it's within the ballpark. If I go SPX this morning, today's the 29th. Okay, we'll see how this looks. So out of the gates, depending on where these deltas are, we'll see what adjusts here in about 9 minutes. But if I can sell 64.30, 64.40, 64.35, I want to sell these levels like up into this resistance. I'd like to sell the resistance. I just don't think we're going to get a good enough credit. If I sell way up here this morning, it's probably only going to give me, 20, 30, 40 cents. I want more profit than that. I want to try to take a trade where at least it gets me maybe a dollar, maybe $1.40, like we did yesterday, maybe $1.25, but also high enough that I don't think price is going to threaten. How do you adjust that trade for better chance to fill? You don't, because realistically, if we're opening here, okay, and we're looking to, sell this call, buy this call, it's going to offer maybe $20 in the beginning because this is so far out of the money. It doesn't really cost us anything for that buy side. This is at the money. You're going to get the plus or minus move, right? Every market maker move you see here, right? This like 20.40, that's roughly what this is going to offer at the very beginning is maybe like $20. Okay. So that means if I take the trade at 63.90, you see here how my bid price is showing about 17.50. If I take the trade just as it's offered, the broker might offer me, 17.50 to $18 credit. Well, that's not the break even that I want. That means that I'm only giving myself about $18 of plus or minus move. If price goes up $30, I'm toast on that trade. I'm taking on all that risk. So the whole point is to take advantage of a huge fill and take as much credit out of this trade as possible, being confident that the high would be in. That's the nice thing about using the VIX. The rule of 16 on the VIX is that it's very rare that we hit this, 1481 divided by 16 is 0.92%. It's going to be rare that we hit that. But when we do, the guardrails are very firm. So if price did rally up to that level, I think that we would rally and reject. The hardest trade, and this is what almost happened last week. It almost happened twice last week. And I was thinking, I'm like, that's the market being really smart. If we wanted to get, if we want to be threatened on our trade, the market did a very smart thing last week, and it's obviously it's a game, right? I mean, we never know what's going to happen price action wise. Both the trades we talked about worked out. Okay, so if I sold the call here and bought a call here, all right, but the entire day the market just does this all day, all day, all day, all day, all day, all day, all day. What happens towards the end of the day is there's no time in the trade to really adjust or fix or hedge. And so when the market goes up all day to try to close near this top at the end of the day, you don't really get that rejection that you want to see. That's what almost happened twice last week. So look, every trade, even as high probabilities I try to make every trade, there's still risk. Okay. Which is why when I sit here every day from opening bell to closing bell, you can get a good sense of direction. Once the day kind of unfolds, I mean, there are days where this market does absolutely nothing, and those days feel great. I don't want to be sitting around trading that all day. All I want to do is get my money in the morning and be done. Okay. But if price is getting a directional bid for the day, that's fine. We can follow that, a sense of direction. We start running into some resistance levels, and it wouldn't surprise me that we hit resistance or resistance, and the market maybe finishes flat for the day. Right. Okay. It's not open bell. We don't have any trades. And this trades will be posted. If I take these trades, will be posted for the alerts. Okay. All right. Give me 1 second. I'm going to shut this window because once they start new construction for the morning, just fills up with dust. Okay. So look, if you're wondering, like, this doesn't make any sense, then jump in daily profit play. Like, get the service, get the alerts, get the telegram. You can follow I sell this call, I buy this call, I sell this put, I buy this put, I take in a debit, I take in a credit, whatever. Get all the trades there. Okay. I'm just sharing an idea. I was on the road for 2 hours last night. So this just hit me of like, I know that trade, again, caveat is this, that trade is not going to fill very often. But when it does, I'm comfortable risking, $500, $1,000, as long as I feel like my break even is high enough to kind of get a guardrail top or bottom on the day. Right. The trade I will probably look at this morning is going to be something around that 64.25 to 30 zone if we can still pull in over $1. And I'm going to start with one contract. One contract. Right. Now, if the VIX continues to go lower, then it might be in our best interest to also look down here. Can we sell puts at 63.40 or 30 and have that be a potential bottom on the day if price isn't disrupted? What would it be? What was it about a Tuesday before Mag 7 earnings, before the Fed? What's it about a Tuesday that's going to be super disruptive today? Probably not much of anything. So the market should be pretty calm. FOMC is Wednesday, right? Non-farm payrolls Friday. The news kind of opened up the floodgates of volatility. Not today. So I don't see the market being really directional as far as stretching 1% today. Okay. What would happen for you to get the $55 fill? That's a great question. So Roberto's asking, how do you get that fill? Well, if I did sell here, buy here for 50, or if I got filled for $55, price would have to go up towards that top, because it's essentially getting filled. If you're at the money, you want to see this trade at 50 or 60, it'd be 63.90. 63.90. And if price is trading at 64.50, that should be a real value trade. That's the intrinsic value of $60, right? That's good. It should actually show a $60 position. So if I'm getting filled for $55, I'm taking on that little risk. But that's how it gets filled. So you're not going to get filled just luckily. You're going to get filled because your price has moved, 30, 40, 50 points. So the only way I'm going to take that trade is because I am confident that we're not going too much higher than this, right? I would probably not do that for every bottom trade because if we're going to see a big spike in the VIX, and again, this is just being cautious. If the VIX spikes up aggressively, that bottom is not safe. So I said this yesterday during our daily profit plan session. I said this a couple other live sessions I did. If I can get decent premium selling the market right now, and it's just selling bear call spreads, it's just the market's been so slow, right? If it's going higher, it's so slow, so slow, slow. That's good. We want it to be slow. We don't want to see our trades threatened. Okay. All right. Yeah, Greg, send me it. ChrisPulverPub@gmail.com. What would be the end result if we closed above 64.50? You lose the 500 bucks. So if I got filled at $55 credit, I'm risking 500 bucks. That break even or that strike price would be the 64.50. So if price is at 64.51, 52, 53, I'm just maxed out of that $500 risk. There is always risk in the trade. Okay. But the the odds of it going past this level based on the VIX, because what happens to the VIX? If price is going up all morning, that VIX is likely not going up. It's not going up. Okay. All right. So look, stop obsessing over that trade for a second. It's just a thought. There's other ways to trade. So we're opening up here, 6389.76. SPY should be up a couple of cents as well. We gapped up to 6405. Yeah, we should be able to get a pretty good fill here. Just got a profit on Schwab. Very nice. That's a pinch point trade, pinch point scanner. Schwab just got filled for profit. SCHW trade number. This is trade number 24. $3 credit. Nice win. That should be a 50% winner. $3 credit. 49.3% winner. Yay. We like it when that happens. Filled for $3 on Schwab. Good. Okay, let's go SPX. So pinch point, another winner. I'm gonna add that to Telegram. Pinch point, trade management, trade number 24. Okay, another winner. All right, we're sitting at 6405 right now. I'm going to see what the chains look like if I can sell high enough. So if I want to go up to my top levels today, I'm not going to get enough credit. If I go 24.30 or 25 to 30, 35, these are a little bit better. So I do have these gamma levels up into this area. Let me see if I can get like the 25s again. This might be small, but let's see if I can get like 25, 35, 30, and 40. So $1.55. See if we can get filled here for a little bit of profit. I'm looking at bear call spreads. Man, that was freaking fast. Wow. Wow. That just went from $1.55 down to $1.25. I'm just going to let that hang out for a second and see if I can get $1.55 on that trade. Actually, move this over here. So if I go 25, so I'm going to just keep an eye on things this morning, but 25, 30, some nice resistance levels. Gosh, that thing that's filling quick. We'll see what price does. I mean, yesterday we started up, we faded down for the morning. We tried to, close kind of break even for the day. Today we gap higher. We're probably going to be choppy this morning. Again, major news is going to be tomorrow afternoon with the Fed, kind of opening up the floodgates and volatility. Um, just a kind of an aggressive candle, just an aggressive candle out of the gates. So let me see if I can still do like a 25 or 30 sell side. So 64, 30 by 40. Can I get filled here for, I'm going to try $3 on this trade. This is going to be a pending order for daily profit play. That's 30 by 40, and I'll go 35 by 45 for $3. I'm going to try to take 1/3 of the width. Actually, I'll bump this up to 350. And then the 35 by 45, bump that up to 350. Okay, so I'm going to put a couple of those orders in right now. How far out can I go to the put side? My lower levels, 50 and 30, kind of bottoms on the day. 50, yeah, just the premiums are so bad. So 40, let me see here, 45 and 35 for 350. That was 45, 35, and I'll go 35, 25 for 350. All right, these are all pending right now, so I'm not going to put these as official alerts because they're not getting filled yet. Let me see if I can get a trade in that I want based on some deltas. 20 and 25. Right at the expected move, about a 20 delta. That one's not too bad to try to grab a few bucks. Let's see. How slow is this market going to be? All right. I'm going to try this trade here. See if I can get $1.40. Okay. So this is what I was talking about with the ATR levels today. We do have some liquidity levels that we've already kind of tested on the call side. So that kind of takes away that directional play that I want because of the gap. We don't really have anything meaningful to the downside today. Are we able to get all the way up to, 64, 20, 25? That's a 100% ATR. So, I mean, it's pretty safe to sell that like 20, 25. So this 25, like 25, 30, if you sell 64, 25, 64, 30, that's a pretty safe move. That'd be a 100% ATR today. I've got a pending order here at 140. That would be the 20 and 25. All right, just got filled for $1.40. So trades in for daily profit play. I'll put this in the Telegram channel. This is 7/29 expiration. So I'm looking for price to stay between 64.20 and 63.80. All right, that's posted as an alert. Come on. All right, I'll add this to the tracker for daily profit play alerts. Center price is around 6,400. $1.40 credit. All right, so I've got a trade in for daily profit play right here. We'll let that just hang out for a few. Waterfall, those are posted. We had new trades. Waterfall yesterday at 12:30. I do have some rolls to take care of today as well. I want to do some technical charts. And if I can get a fill, like I'm going to try this trade pending order. Let's go SPX. If we run all the way up towards like the 40 by 50 zone, I'm going to try to get, see here, 30, 40. I'm going to try to get those. We'll see. I'm selling the 35 and 45. I'll wait. So what I'm debating on is if I'm pretty confident we're going to have a, if we have a high today, it's going to be around 64.45 to 64.50. So what I'm going to try to do is maybe sell, what I talked about was, okay, let's just do simple numbers. If I sell the 6,400, okay, and I buy the 64.50, that trade going 50 wide, it's already offering 11.50. That's fine, but that means my break even would be 64.11.65. Like that's not a good break even. So what I'm going to look for is a break even of like $45 credit, which means I want price to actually get to 64.45 today. If it gets there, great. If it doesn't, I obviously want my initial daily profit play to do well. So I'm happy with prices doing nothing. Like price goes sideways, totally fine. Okay. But if we have a directional move today, I'm going to try to get this one filled. So that's going 50 wide, trying to pull in $45 of that credit. It's a low probability fill, but I'm only taking up about $500 of buying power, and we can kind of call that top for the day. Okay. So a couple pending orders. Now we'll see what price does. Price for the morning, we gapped higher, and that's fine. We gapped higher, big deal. So now it's a question of what does price do? If we gap higher, do we just stay this way for the morning? Because that's perfect for daily profit play. If we gap higher in price, falls and fills, then we'll watch. If price gaps higher and has a little bit of momentum higher, we'll watch. I just want to see what price does. So trade is done. Like now I just sit and wait and manage. And if I can get a good feel for where things are going for the day, then I can, add more positions. But realistically, I'd like to see price just stay pretty choppy. Okay. All right. I'd like to flip over to theme of the day being Technical Tuesday. Let's take a look at some charts. So I'm just going to use my watch list here. We are slightly higher once again, overbought conditions with divergence. Take a look at this on the monthly chart. So our July candle just got a lot bigger these last couple weeks. So July so far from open to high is up around 3.6%. June was big. May was big because that reflects a rally off of April lows. I think this market is trying to cling to these July gains just based on seasonality. And, August is probably a good month for a pause. August, September is a good month for a pause and or pullback. We do need to see a technical pullback. This is starting to be like a record-breaking stretch where we haven't seen the market, go this far above the 50-day moving average in like 40 plus years. And we haven't seen the market stay this many days above the 21 period moving average for 40, 50 years. So it's an unusual stretch, which is also why if we look at like market breadth, SVF, what is it, S5? Here it is. Let's look at market breadth for a second. So how many stocks in the S&P are above the 50-day moving average? Right now, we're showing about 67% of them. It's not quite at the point where I would say like I want to sell the S&P or I want to be taking profit on the S&P. All right. This is a good symbol to write down if you have trading view charts, S5FI. This is a great market timing indicator. This is a great market breadth indicator. If you have an opportunity like we did in April to buy the S&P, this is exactly when I decided to buy it. When we were down here at, 11 or 10.8, I mean, this line goes back, 20, 30 years. Um, this is what allowed me to buy the S&P at 496 this year because of this timer. Qs, same thing for the NASDAQ 50-day moving average. I had the Qs, I bought the Qs at 408. So SPY at 496, the low is 482. Qs at 408, the lows were like 402. That's a pretty good timing measure. Now, the same thing would be true to like take your profits or look to maybe add some hedges, which would be if this market breadth gets back up towards like the 90 plus percent. That means that 90 plus percent of stocks are above the 50-day moving average, right? So between this 50-day moving average, we don't see a lot of times where it's, dramatically high or dramatically lower. So if it ever does test the lower threshold of this market breadth indicator or the highs, this is a good time to be looking to buy. Okay, so this is always like a good buy indicator. So you can, buy the S&P, buy the S&P, buy the S&P. Look at when these timings are. If you've been in the markets these last few years, okay, getting a trade near the lows in 2018, that would have been like, either January 2018 or December 2018. Chance to buy going into 2019 was a huge rip. Okay, then again in 2019 we had another pullback. 2020, of course, that'd be your COVID low. 2022 getting in December, you had July, August, September 2022. It was like the final push lower in 2022 when that 7, 8, 9 month bear market ended. You get the timing indicator right here between July and September 2023. 2024, that was the dip in July, August of 2024. That was like really the only major pullback we had. We had a bit of a slide in August, but we had a big pullback. It was 10% in July to August 2024. This year was, Liberation Day. This thing was broken down, and this is a great trade to time. Okay. Kyle, what's the issue? You're not getting the trade and daily profit play alerts and Telegram in real time. You're not getting on the tracker as I'm talking about it live. So 50-day moving average, and then the 200-day moving average. Okay, market breadth still 60.75. Market breadth here on the 200-day, like very overbought coming into this. And I mean, this wasn't like great timing because if you wanted to sell the market here in April 2021, it was a terrible sell. All it was it was dips, right? The market didn't top over until it would have been November of 2021 was the NASDAQ top, and January 2022 was the S&P top. So I'm way more interested using this market breadth indicator as a chance to buy the dips. Okay. But I would still, urge caution and protection, like take some profits, move some trailing stop losses, because if you're up in this area, things are a little bit frothy. Okay. Um, Kyle, I mean, if you're in daily profit play officially, we've had that discussion before. What do? You don't have to take the same legs I take, right? You can go directionally neutral. You can find your deltas. You can pick your deltas, sell your call, sell your put, choose the spread you're comfortable with, choose the width, look at a brand new neutral trade, right? If I go different account and I look at the trade right now, trading at 64.01. Okay, so I do a 17 delta here. I can sell this, buy this. I'll do a 17 delta on the other side. Here's a 14 delta. So there's a trade. There's 10 wide. I'm getting $1.80. If I'm comfortable with that risk, if I want to go a little bit tighter and shorten up the risk, I still get $1.10. That's still a good trade. But you don't have to take the same legs. It's like just make it delta neutral based on current conditions. Okay. All right. Does this market breadth indicator make sense? You might want to add these to your watch list of interest. These are great timing indicators, especially near the lows. It is S5FI for the 50-day. It is S5TH for the 200-day. Okay. And then on the NASDAQ, it's NDFI, which is the 50-day, and NDTH for the 200-day. So the NASDAQ, for example, 71% of stocks in the NASDAQ are above the 50-day moving average. 71% of stocks are also above the 200-day moving average. So we have like a pretty healthy bull market running on both S&P and NASDAQ, which obviously makes sense when we're back to all-time highs and continuing to poke all-time highs. I think today is like number 14 or 15. Number 14 or 15. So, I mean, and as everyone like, I mean, I personally like, I kind of hate buying all-time highs, but once it's there and that milestone is kind of reached, the easiest thing for the market to do is just keep trimming, or not trimming, but just keep poking all-time highs. I mean, we're poking all-time highs today, but we've pulled back, right? Like it's not a surprise that we poke, we maybe pull back a little bit and we just kind of stay here for the day and just kind of linger around these all-time highs. I mean, hopefully the market's not going to give back a bunch of gains. So the levels I'm in right now, I need to put in, I'm just going to put a couple horizontal levels here. So the 20 was my sell and the 80 was my sell. So I need to see if price can stay within these levels. So if it stays here, that's good. So if it stays here, just kind of chops around for the morning, that's totally fine. The trade that I did take, and Kyle, guess what, man? If it's too fast, it's okay. Guess what we do tomorrow? The same thing, you know? So what I want you to get more comfortable with is either one, I'm walking through the trade live. I'm putting in my levels. The most important thing I could talk about in daily profit alerts in the class we've had, the master classes and all the sessions we had running up to this point was you find your deltas and you focus on the sell side. So find your delta to sell the call, find your delta to sell the put, and then you choose your width. You can always be delta neutral in these trades. Okay. And if it's too fast, then we can do it again tomorrow. And I mean, I honestly hate to see that. I don't know. I mean, if Kyle's posting that for everybody, Kyle says I need to switch to another program. So disappointed. I don't know why. I mean, when we've taken over almost 400 trades in the service at 90+% winners, I don't know what's disappointing. You know, you're stepping into a market you want to trade every morning. You have to get trades in within the first probably 5 minutes. You know, so I mean, you want to be a little bit faster to find your levels in your options chain, sell your call, sell your put, create the trade you want to trade. It's just getting more comfortable with it, right? I've got traders that could barely turn on a broker platform 3-4 months ago that are now taking 3, 4, 5 trades a day. You know, so I mean, if I've got some daily profit play members out there that want to give Kyle some words of encouragement, like don't drop it. You know, that's silly. Where it's way too good of a strategy. It's way too much of a moneymaker. It's way too consistent. It's very simple to follow. Like once you get comfortable with the process, it's a very straightforward trade. And there you go. You know, Larry's 155K with this program. Yep. And there's Catherine says it couldn't get filled yesterday, so I came back today and tried. There you go. So, I mean, Kyle, if you want to, man, just look, send me an email. Like, let me help. I mean, this new format, look, if you were in my daily profit play before this, what did we do? We placed a trade every morning within the first 5 minutes, and then we sat and talked for 30 minutes. All I'm doing in this format is I'm filling up 30 minutes instead of just general talk and just watching a trade. We're talking about other stuff. And there's always tomorrow, you know, and look, the trade's not done here. I'll make the market's pulling back a little bit here, but let me see. I'm going to take a small risk trade here. I'm just going to go from scratch. I don't particularly like this trade because we're already, 20 minutes into the open, but if I ever felt like I missed a trade, you can always just look at the trade as is. We're right now centered around 63.97. That's where price is at right now. Okay. So this little green dot on my screen is where price is at. I can look at how my option chain has adjusted. Right now, my 64.15 is my 18 delta sell call. If I look at my put side and I go down to a similar, when I say delta neutral, I mean I find an 18 delta on the call side and I'm looking for a similar delta on the put side. I have a 20 or a 16. I'm going to go 16. So if I just chose my sell side, there's my sell side call, there's my sell side put, and then I choose my width. So that trade right there is a valid daily profit play iron condor. Now I'm still risking in this trade. It's five wide. So I'm still going to risk about $380 on the trade. But if price stays below 64.15 and stays above 63.70, I have the ability to make $1.25. What I'm looking for on this trade is if my $1.25 will decay down to 80 cents, 85 cents, 75 cents, I'll take the profit. Okay. So there's always tomorrow. And email me. I mean, I'm serious. Like this is silly. Like I chrispulverpub@gmail.com. I'm here to help. You know, I'm not smarter than any of you. I might seem fast to some of you, but it's just because I'm comfortable navigating a broker platform. You know, so let me help. But this new format isn't anything different other than I can talk about more stuff now because all we did before was fill the air for 30 to 45 minutes after the trade was taken. That's not faster, right? We just sat and talked about the trade for 45 minutes. But this is a trade I could take. If I want to go a little bit smaller on the call side, I'll move it there. So now it's a 14 delta call and it's a 14 delta put. The only problem with this trade is I'm only pulling in 90 cents on the trade and I'm risking 410. I don't love it. And the reason why is because this is 24 minutes after the open. Had this been within the first few minutes, this is probably trading for like $1.20, $1.30, which helps me, justify the risk a little bit. That makes sense? And Dave's a good example, right? Dave's a good example on just sticking with it. So look, I say all this and Kyle, you still here? Or has Kyle gone? Hope he's not. But hopefully he's here. Send me an email, chrispulverpub@gmail.com. Let me help. Because missing a trade for one day, you can trade 250 days a year. Okay. And Kyle, were you in my class 2 weeks ago? Were you in my class 2 weeks ago? Like the standard daily profit alerts class that we did every morning 2 weeks ago. Because what I said is I'm not going to post these trades for the public. This is a member service. If you're a member of Daily Profit Play, you have the alerts. I posted it in real time. I'm talking about it in real time. I posted it in Telegram in real time, and then I put it on the tracker. We've been doing that for a year. So again, email me. Let me know how I can help, please. But I don't think anybody should just drop out of a program that has people making a ton of money. It's the bread and butter strategy. We do it every single day. I mean, look, this is a nice way to get a pulse of the market every single day. I don't know what else does that. And I'm talking about a pulse of the market where it's like, oh yeah, I think the market's gonna be up today. Do you do anything with that? I'm talking about a pulse of the market where it's like, I want to trade it and make money every single day. Okay. All right. So Kyle, hope to see an email from you. chrispulverpub@gmail.com. I'll type it in again. All right. So I'm still watching this. These are my levels here. So like that's my sell put, that's my sell call. I want to see price stay pretty sideways. That's a way that trade's going to make money today. We'll see if it does. If the market kind of come down, maybe gap fill and then try to stay centered and neutral on the day, that's totally fine. Try to grab a few bucks. Yeah, market's kind of coming back a little bit, which is nice. There we go. So this should be helping. So I'm up about 15% right now. I'm pretty happy on this trade for a 140. If I can pull, 40 cents out of this one, I can close this for $1. I'd be pretty happy with that trade. Nice, Fred. Um, Larry bear call spread 265 out at $1. That's awesome, man. Yeah, that was quick. I mean, I would have loved that bear call spread. I was seeing like the $1.45, $1.50 right away. It was down to $1.20, but before I tried to get the trade. So, but great fill, man. Good job. Greg closed out at 85 cents. Very nice. Okay. So up about 14.3%. I'm going to try to take this one down to $1 or less. So I'm in for $1.40, which means I need to let this price marinate just a little bit longer. But mechanically speaking, we always kind of talk about this like 15 to 15 to 25% take profit. We're right there. I mean, if I want to take a small win for the day, grab my 20 bucks and move on, but I'm going to try to go after 30, 40, 50 bucks if I can. Yeah, I get it, Tom. But I think a lot of traders get comfortable with me very quickly. They see the same thing, they see the same process. We talk through the same trades over and over and over again. I know it sticks. If it didn't stick, I wouldn't have people that have literally followed me since. I mean, I started trading education like 2012, 2013. I've met people that still have followed me for that long. So I know it sticks. And there's nothing special here. I've just been doing it for a while. I'm comfortable with my broker platform. We find some trades. All right. So Kyle, if you're still here, that's really kind from Dave. Dave's a member daily profit play. He's even saying he's happy to reach out and chat with you too. And Dave is like a great poster child for like the whole learning process. Um, I think Dave would be confident to say he's very comfortable with how he trades, this strategy every single morning, and he's doing really well. Yep. And Randy, look at that. 179 wins. That's awesome, dude. That's so good. Okay. So still up about 14.3%. I'm gonna see if I can get this thing to close out. I'm gonna try for around to $1. I'm gonna try $1. So I got in for $1.40. I'm gonna try to get out for $1. Price is kind of coming right back towards center. We're trading at like $1.05, $1.10. It's 10 a.m. Let's see if we can go another, I don't know, 5, 10, 15 minutes. If price stays relatively calm here, maybe that's all the time we need to get profit. FOMC meeting starting now. That's not true. FOMC meeting is Wednesday at 2 p.m. So what's today? Nothing. There's nothing today. Oh, we had Jolt's job openings this morning. That was it. FOMC is all tomorrow, and it's tomorrow 2 p.m. Yeah, but nothing. I mean, nothing's going to pop up in the news for today. Everything's going to be tomorrow at 2 p.m. with announcements. Going to be a pause that's like 97% baked in, and Powell's press conference at 2:30. So there shouldn't be anything FOMC related today. All I want to see is, I mean, honestly, I it and I apologize for this yesterday. It totally didn't hit me that it was. I mean, I'm silly for saying this. It's like obviously I know it was happening this week. I mentioned multiple times what's going on this week. It's an FOMC week. Monday price is really calm. Tuesday, so far prices, a little volatile at the gates, but still very close to center price. We've had a lot of success these like Mondays, Tuesdays leading up to FOMC. So hopefully today is kind of that trade too. It's just really chill. It started off a little sloppy and messy with a drop for what was that? 09 to 93, so about 15, 16 points. But we're not too far off like the first candle. So we'll just give it some time. Bill says out at 110 this morning. Nice. Got filled at 145. Was that the original bear call spread? Was that the original bear call spread? If you got filled at 145 or 150, that's a great fill. I tried that 145, 150, 155 when it first showed up on the mid price, but it just didn't take, and it was down to like 120 real fast. So I didn't have that trade. Yep, that's good. Good, good. So all good. It's fine. We'll see how this iron condor does. And if that grabs, it's up about 30 bucks. So I'm up 20. I mean, there we go. It's right there. I've got to be close. All right. So maybe on the safer side, let's give it some time. I'm gonna see if I can get out of here for like a let's try the 105. Oops. 105 fill. It's right there at $1. So I've got it pending at $1. It's trading right around 105. I want to see that. I want to see this mid price go down to like 95 cents if I can. If I want to be just safe and get out of the trade within, about 30 minutes, then I should just bump it up to 105 and get out of this thing for 35 cents. It's getting close. Come on. Good on that, Greg. Yeah. Okay. All right. So I'm changing this to a 105 debit now. So 140 credit was the fill. 105 is my pending. Trying to get out of this trade. And then I'd like to have another learning segment today on some covered calls and some rolls. We'll kind of combo that too, those two together for our education segment today. I've got a few more trades to take care of. I did the SPY yesterday. I need to do Tesla, IWM, UNG, and JD. I also have some Qs that I need to pay attention to. So up about 34 bucks, 35 bucks. It's got to be close. It's right at that mid price. So the broker should fill me here hopefully in a few minutes. The price just stays where it is. All right. Hopefully by 10:10 to 10:15, this thing is out for profit. Okay, so keep an eye on that one. Okay. Yeah, a little green is good. There we go. Just got filled at 105. So that trade's done. 105 is my closing order. So not a huge win today, but enough to take it quickly. It's fine. And now I'll just kind of wait for the rest of the day to kind of unfold. Okay. So we are kind of sticky between, this little cluster of resistance. We do have a high volatility level and a positive negative gamma level between 63.80. And then my support guardrails would be like 63.70 to 50. So if you're kind of dancing between those levels, that's totally understandable. I'm just going to wait and see, if price catches a bid at all and tries to get back to all-time highs for the day, I'm just going to try to sell this thing really, really high. Not for cheap credit. Like I'm looking to sell this thing at like 64.30, 64.40, 64.50 and try to get a decent fill on all those trades. So right now, I do have some pending orders. That one's out for 35 cents per contract. This one is pending. And then the 35, let's see, 25.35. I'm going to cancel that one. 35.45. I'll change that one. So that's going to go 35.45, 30.40. All right. That one's okay. So for today, I'll keep the 6,400 by 6,450. And then what I'd like to look at is maybe let's see here. Let's look at some levels. I want to just talk through some ATR stuff today. So this is where price opened yesterday. Okay. According to this price action here, we just hit the 50% ATR. It is very possible that in a standard day that the market doesn't go too much farther than the 50% ATR. So that kind of caps us out for the morning around 64.10 and potentially, we have room to get down to like 63.70. So if I'm calling like kind of based on an ATR, the highs and lows, that's more like intermediate highs and lows. Those are good spots to look for. Okay. The 100% ATR is very difficult for price to reach. Those are usually like those very reflexive days where when price hits like the 100% ATR, it tends to reject. 100% ATR tends to reject and bounce. Okay. But right now it's just markets celebrating all-time highs. You're going to see it in the headlines, even though we are back below yesterday's high, And so we could still be positive on the day as long as we're not coming back below this gap. And the market could be like, yay, all-time highs. Market closes green. It extends its streak, but it's a little misleading when you see this stuff, right? Our call and put volume sentiment. This is call and put sentiment. It's a little tighter, 41 to the upside, 27 to the downside. Anytime I see like a 30 plus, if there's like 30 plus, either one side is 30 points higher or lower, then I'm usually trying to favor that direction. But anything inside like, 20 or 15 or 10, then that's a very directionally neutral day. So just, it's just helpful to have some of this software that kind of gives me the roadmap and the order flows coming in to see whether or not this is like really a call driven market or a put driven market, or it's more of a neutral market. Uh, yeah, that's a good question, Bill. I don't love getting into the trades later in the morning. But on a day like today when it truly is, FOMC is tomorrow, the markets might be very quiet today. I mean, a second trade wouldn't be a bad idea. If you're already out with trade one in profit, trade number two at 10:09, I'd say as long as you're out of that trade by, 11 or 12 Eastern time, if price just continues to chop around here and is a very boring day, you're going to grab another winner. But what happens is the expected move will continue to get smaller. So even though we're only 39 minutes into the day, the expected move is now shrunk, right? And so this kind of probability is going to continue to get smaller and smaller and smaller until the end of the day. So we start at like 9:30 a.m. and then we get all the way down to 4 p.m. when it closes. This gets super, super small at the end of the day. So the biggest premium is going to be in the beginning of the mornings. ATR is average true range. Average true range. So it's roughly what the market is able to do, right? Like 100% ATR is going to be based on the previous 5 days averages. Okay, so if I have the previous 5 days point wise, we started here around 63.90 point wise. This has given us about a 30 point move to the upside, and from 90 down to 50, it's about a 34 point move to the downside. So about plus 33 to the upside, plus 34 to the downside. That's your, based on the last 5 days, that was the market's average. So it's giving you, okay, if we go 100% of those last 5 day averages, that's given us roughly like where this market can go. So the outlier to that would be, oh my gosh, we had a 50 point move today in the S&P. Well, that's above the ATR, right? And usually when we have days like that, the next day it tends to shrink. There's all sorts of little cool things here. Like if we have a day where it's under, if it's under ATR today, guess what that probably means for tomorrow? Tomorrow will be an FOMC in the afternoon. Tomorrow is probably going to be a type of day that if we watch this in the morning and you want to have some fun and note your 100% levels, price is probably going to test one of those tomorrow. Because if we're under, at some point we're going to have that little expansion into those ATR levels, right? So tomorrow is a pretty good day to potentially be, directional, just because the market's likely going to have some type of push higher or lower. Yeah. Okay. All right. So that means my trade's probably, yep, look at that. It's already down to 95 cents, 90 cents. That would have been nice to grab. That would have been nice to grab a quick, $50 out of that versus 35, but whatever, it's fine. Always try to find another trade. But overall price is cooperating for the day. Good stuff on daily profit play. I would say close out. You're already up, 30, 35%. Take the profit. Stay mechanical. Don't be greedy. Yep. Kim 2 for 2. Very nice. Good stuff. Okay. I'd like to switch gears talking about some covered calls and rolls. Okay. Technical Tuesday, a little top down. Markets are up. That's fine. VIX is hanging out around that 1484, not really up or down. I would imagine price is going to be relatively calm I'm just going to wait. If I'm going to take additional trades for the day, I don't know if I'm going to do another iron condor. I think what I'm going to do is just kind of wait. We're kind of sticky around the 6,400 level. That's fine. We have the 6,380. Like these could be some sticky levels for the rest of the day. There is a chance of like, do we just stick to 6,400 today? It's possible. Trying to think, how much would I risk if I did a pin level down here, pin level here, pin level here? I might be able to. It's a lot of trading, but um, I guess it depends on what I can get, risk and reward. Let me see. Yeah, I'll just wait. I'll wait. Have some patience. Vladimir out with 50 cents, very good. Dave out with 255 bucks. That's awesome. Good stuff. Okay, let's do some more top down. So as I mentioned, we're overbought on the S&P, overbought S&P with divergence. Okay. The Nasdaq hasn't quite registered yet, but kind of the same thing. We're stretched. We've got a long push away from the 50-day, and we have a pretty long bar count above the 21-day. So these moving averages right here. I don't know if it's going to be FOMC. I don't know, but we're going to hit this level. We're going to have a pullback at some point to hit one of these levels. Either this 21-day is a minimum pullback, 50-day probably the likely pullback, and previous all-time highs getting tested. That's at the very least. So, that's roughly a 4 to 6% correction between, current highs, and that would put us around 5.5% on the Qs. So about a 4 to 5% correction on the S&P, about a 5 to 6% correction on the Nasdaq. That's my minimum pullback. I think we can go more, but nice, Rich. Tom says, please define the pin. It's just a strategy. If I were to, when I say pin, it would be a strategy where I get like a profit trap if I can get price to be at that exact strike. So these are usually like very cheap trades. Like I could get this trade for maybe 30 cents, 40 cents, and potentially make $300 to $400. But if I do this multiple times, I'm hoping that one of them lands. But I've got to kind of get it like perfect by the end of the day. So if I did it right now, I'll just show you an example. If I do the 64, so this would be doesn't matter if I do a put or call fly, really, it's just put in the trade. Call premiums to see if I get a bit more skew. I get a bit more call premium, so I'll probably do a call fly. Since I'm 2 contracts on the call fly. So if I pin it at 64, so for a 50 cents debit, I can still get up to $450 profit if we're hanging out around 6,400 for the day. If I go a little bit wider, now I pay 225, but I can make that's about 3 to 1. I don't like that trade as much. This is way higher reward to risk, but it's a much lower probability trade. This is very difficult, which is why if I take this trade, I want to possibly put like 2 or 3 of them on because I can kind of pin different levels, maybe risk in total $150. If I'm right on one of them, I can make $300 to $400 on the trade. So let's say I risk 1 to 150, I can make max of 4 to 450. It pays for itself. I make a few $100. Yeah. So a butterfly trade is kind of that. Like when I say pin, it's a trade that looks like this on the risk graph. It's something where you have you can do the butterfly spread, which is symmetrical. You can do a broken wing, to the call or put side, which means you have a profit trap at the end of the day. You can also do an iron butterfly, which is a larger level, right? You have risk on this trade, but it's a larger level of risk. So either a very cheap, narrow butterfly or a wider iron butterfly. But it's that profit trap at the end of the day, and that's the pin price that I'm referring to. It's like this would be 6,400, 6,400. What's that scribble? If it's 6,400, what I need price to do is be pretty much at that price or within a couple of points. And that is super profitable. It's also just difficult to do because it's so easy if the market be like, yeah, I'll be at 64.06. And you're like, wait, I only went 5 wide on that trade. I lost everything. So I could lose 50 cents real easy. So I'm picky on these levels. So anyway, just kicking it around. When I sit opening bell, closing bell, I kick around some trade ideas. That's not that hard. Okay, let's talk. We're good on the technicals. Just expect a pullback. Have some moving averages on your chart. The 21 period, the 50 period, minimum pullback in my opinion. Previous all-time highs, minimum pullback in my opinion. You go to the Dow. The Dow is not quite at all-time highs, but it's close. It's not quite there yet. Are we going to push up a little bit higher in the Dow before we pull back, or is it going to be kind of the same fate as the S&P and the Nasdaq? Pull back to the 21, pull back to the 50. We obviously are not at all-time highs yet, but if we pull back to these levels, I don't mind looking at the Dow as, okay, we have a pullback on the Dow. Can we go back up to all-time highs? So if I kind of like the Dow for a pullback into here. If we have a pullback into, let's say, like 430 or so, it may not be as crazy bullish as the S&P and the Nasdaq, but it's also way cheaper. If I'm going to buy shares of an ETF, only paying 448 isn't too bad. And then that other argument is, well, what about the Russell? Yeah, the Russell's way cheaper, right? Russell's trading at 224. I'd love a pullback on the Russell towards like 210 and then try to get to all-time highs. That would be a great this would be a fantastic catch-up trade for 2025. If the Russell can hit all-time highs, you can see that high. The S&P is at all-time highs. The Nasdaq is at all-time highs. So if the Russell plays catch up and small caps outperform, that's a good thing. I just don't think the small caps are going to get a ton of love unless we see rate cuts. So if we see rate cuts in September and December and going into 2026, rate cuts can probably benefit the Russell. But there are a lot of companies in the Russell that don't make money. That's my biggest concern with the Russell is that I would say if I could trade the Russell 200, which is this, you've got the Russell 1000 value, you've got the Russell top 200 growth and the Russell top 200 value. Look at how well these have performed. Top 200 growth, this thing is up to all-time highs and this thing ripped from these lows. Okay, this is up 42%. That has performed as well as the NASDAQ from those lows, right? You go to the top 200 value, it's not quite as good as the growth, but it's still pretty good. That's a 20% rally. So, I mean, IWY is a way to play the top of the food chain in the Russell. Only problem is it's actually more expensive than the IWM, and the options aren't nearly as liquid and solid. I just like IWM for like the liquidity, but still a good trade. Okay, VIX at 1485, just kind of hanging out here for the day. Move index. Actually, I'll switch this over. Let's go back to VIX here. Move index. This is some bond volatility. Let me check TLT for a moment. TLT is up to 86.8, getting a little bit of a bid. Not bad. How about yields? Yields are down slightly to 4.36. So I do have some calls on my TLT at 89. I think these are out to August or September. Let's check some Mag 7s here. Mags has got to be close to hitting all-time highs. So we peaked out today around 58.40. We have previous all-time highs on Mags at 58.79. We'll see what's like pushing and what's pushing, pulling on Mags. Apple at 212. Earnings on Thursday with Apple this week. Amazon just shy of all-time highs. Amazon also has earnings this week. These are both on Thursday. Broadcom, I was dead wrong on that bear call spread. This thing just won't stop. Can't stop, won't stop. I do want to short this thing. I really do. But let me try to build a trade out on AVGO right here. I think I put this trade on yesterday to like price it out. It just doesn't price out very well. If I go 31 days before earnings, so this is a earnings play on the 4th of September. If I try to get out of this trade by the 31st of August, I'm curious how this one looks. So expected move, 2025, maybe something like this. I don't think I'm going to get much credit for it. 60 cents to risk 940, but a profit trap of 500 bucks. This is similar to what I did on Coinbase. This isn't a bad trade. 19 delta. Can we keep going higher? I just like if we blow the top off here, I mean, what's my strike? My line in the sand strike is going to be about 330. 330. Let me see what the profit is if I go one strike lower. So one strike lower, 45. Let me see if I get 50 bucks. If I get 50 bucks, I'll take this trade. See if I get 50 bucks. Okay, so it's not filling for 50. Let me try 49. So mid price is 43. I don't want to take less than 45. If it doesn't fill at 45, I'm not going to take this trade. All right, and final fill offer 45. No, I didn't take. All right, never mind. Cancel it. So, well, I think it's the right idea. I really like that trade if I get a better credit for it. I just don't, unfortunately. It's fine. There's always another trade. But, Broadcom, one of the more, I mean, this has to be now. It's 1.41 trillion. I mean, this has to have eclipsed something. I mean, you have Nvidia, Microsoft, Meta, Google, Apple, Amazon, Tesla, AVGO, that's 8. You throw Berkshire Hathaway in there, it's over a trillion. Like that's 9. I don't know what the 10th. I don't know what I'm missing. Um, anyway, your top 10 is still just doing really well. Apple, Amazon, Apple, and Google have been like the lagging Mag 7. Apple's been like probably the worst of them. It's not bad. It's just not going up. Amazon is creeping up to all-time highs. Google's been looking better. Microsoft and Meta tapped all-time highs again. AVGO like ripped through all-time highs. Tesla's been a bit of a laggard. I still like Tesla though. It's just the premiums are so good on Tesla. I can't not trade it. Okay, Google having a nice little run here. We had earnings last week on Google. Meta earnings this week on Thursday. I mean, I don't want to hate on Meta, but I'd love to see like a bit of a dip. I wouldn't mind getting a dip to trade this as a range. If we have like highs and lows, part of me thinks that it's just going to go higher though. So any dip is probably good for Meta to go back up. This is, everything that's hyped out with AI. Meta's looking good for just, any pullbacks, any gap fills. You pull back into like 660, pull back into this gap fill level. I could see these trying to retest the highs. So, but I would do it with defined risk. I'm not looking to like take on 100 shares at a, $600 pop. Microsoft continues to go up, very overbought conditions all the way up. This has been overbought. It's just getting more and more extreme. To me, this is probably gonna be something that like either tops out and then rolls over on itself a little bit, or we have a gap lower and then the market is able to position for resistance here becoming support, right? Past resistance becoming support, and then we retest those highs. So any dip on Microsoft, I think is a good opportunity to take advantage of a dip to get back to these highs. Netflix has sold off a decent amount off of these highs. We're down double digits, I think. Yeah, 13% off the highs. Look for the dynamics of this moving average cluster. So we're below the 50. Here's a 100, 144, 200. If we fall back into these levels, Netflix looks pretty good to buy that dip. So to come back to like the, 100, 144, 200 moving average, that's a good debit spread opportunity if you ask me. Like you buy a call, you sell a call, make the spread, price goes higher, keep it. It's a good looking trade. Nvidia at all-time highs. I'm just selling calls on Nvidia at this point. My calls are like the 130, 135s. They're just weighing the money, but my break even's like down to $100. So I'm just going to ride this thing out. I'm way behind this trade. I mean, hypothetically could be up, $70 a share, $75 a share. But I'm up, $35 a share. It's fine. I'll just keep selling calls. But crazy. I did buy it when it was down here towards $100. I bought it at 100 and I took it off at the all-time highs at 150. So I did sacrifice a bit of the upside. That's okay. Now look at the moving averages. Do we pull back to the 21 or the 50? There's a lot of volatility in this one. A pullback is understandable. Now, do we pull back here and hold, or do we pull back and give some back? So probably trading with caution. If we pull back aggressively on Nvidia, then I'm probably looking at more, ratio spreads and things that I do for my Project Options Edge class. Okay, Tesla 318. To me, technically, I look at Tesla like this. We have a bit of a wedge. We have a bit of a wedge. As long as the wedge structure doesn't change to the downside, to me, this is a accumulation phase that hopefully has a move to the upside. And if we break this head and shoulders, I think we are talking, a run to all-time highs. It might be choppy, but I still believe in like the components of Tesla that are energy related, AI related, humanoid related, profit margin related. I just think that when everything dominates on Tesla as an automaker, it's just not getting a lot of love as an automaker. It's like in all the other stuff, like robo taxis are exciting. It's still like proof of concept. It's still like getting rolled out in kind of a pilot test in all these different cities. But there's demand. I think that it's just not the only EV in town anymore. China is heavily competing in the EV space right now, with way more sales. And obviously, when they make something and they want to run it with their own markets, they don't care about American companies. So Tesla has a lot of competition. And I think we could argue that there are probably better EVs than Tesla. They really haven't changed much on the cars for a long time outside of their computer updates. But anyway, I still like the stock. I think it's a crazy rich premium, which I love. It's great for covered calls, but you're going to sacrifice some of the upside if you get like the big rips. Like when this thing ripped hard and this thing ripped hard, it's like, yeah, I'm upside down in the gain or the appreciation, but I'm just selling covered calls for like 3, 4, $5 every couple of weeks, and that's pretty good income. Okay, Berkshire, um, bounced off the 200-day moving average. Honestly, this isn't a bad trade. If we think Berkshire can go higher and we're hitting support at the 200-day, I'm just not sure how we've got Nasdaq at all-time highs, SP at all-time highs, and Berkshire's like, man, we're going to be down here below the 200-day. So if this like bounces around, maybe it carves out a low. That's probably a better trade. But I want like a low risk, high reward trade on Berkshire. Okay. Like I said, bond market catching a bit of a bid. Let's go currency strength for the morning, and then we'll talk some covered calls and rolls because I want to take care of a couple of those before we're done with session today. Currency strength really quiet. Swiss is low, Euro's low, dollars on top, yen's on top, but very quiet on the axis. So not a lot of volatility in currencies. Tomorrow this thing opens up. FOMC tomorrow we get a little bit more volatility. Just expect it. It's probably going to happen. Okay. All right. Let's talk here for covered calls and rolling calls. I want to focus on these kind of as a combo lesson because I'm going to do it in my account. Um, let's actually look at a couple trades. I do have a new account that just landed that I'm going to look to start getting some allocations in, and this account just cleared as well. So I'm going to start getting some allocations in. I actually think on this one, this is my Roth IRA. This is one that just opened up, and then I've got a new client. So let me do this. I'm going to construct a trade here. I'm going to go SPY, and let's try to keep it somewhat mechanical. I think we have a pullback coming sooner than later, but I wouldn't mind owning the SPYs, but I want to try to generate some income first. So if I looked out maybe 63 days is end of September, I think we have some higher volatility coming. I think that pullback in like the 600s, I'm going to see what I can get filled at. So let's go SPY. If SPY were to fall into like the 530 zone, I'd take some ownership. I'd certainly take ownership in the 510s. Let me try maybe a 510. What's a naked put? It's better if I just buy the shares and sell covered calls and do a collar trade. That's probably the safest trade. Um, yeah, that just doesn't really offer anything. I'll go a little bit further out. If I go end of the year, let's go 510 now. Now I get, $300. That's not bad. It's income, but that's a long ways to wait. If I do a ratio spread, I get 314. I can lower my cost basis on ownership. Not bad. What other price level would I like? If we stay above, 530, I can probably get a bit more premium for that. So there, it's a $400 income trade. It's not bad. What's that question that Randy own? Nvidia 200 shares at 120, having trouble with cover call strike to sell. Are you selling calls right now already? Are you selling in the money covered calls, or are you just not selling any calls? What are you thinking? Question for you is, do you want to keep the shares? There's two ways. So if we talk covered calls, nothing yet. Okay. So if we talk covered calls, here's kind of my rule of thumb on covered calls. Okay. Covered calls. So the question you have to ask yourself as the investor here is, do you want to continue to own the shares? Okay. So for example, I don't want the shares called away, right? So let's do a bunch of if thens. If I don't want the shares called away, then consider selling out of the money covered calls, right? And that'd be somewhere like if you want a lot of price appreciation, like a 10 delta. If you want kind of the run of the mill, like a 20 delta, right? That gives price a chance to appreciate. If it exceeds that 20 delta and all of a sudden that out of the money call becomes at the money, you're getting a lot of price appreciation, which is a good thing. You're still getting premium to let the calls go, and you can reestablish a position. You can also roll all this. So you don't have to let the broker like take your shares away. You can just roll the call out further. Okay. So if you want to continue to own the shares and you don't want them called away, then go out of the money. So for Nvidia, for example, I mean, Randy says he owns it at you own it at 120 or so. You haven't done anything. I typically like, so we have Nvidia here on the 27th. We have an expiration on the 22nd. So this is right up into earnings. I mean, right now, given the fact that we are sitting near all-time highs and we have earnings coming, earnings is obviously another big catalyst, for better, for worse. I mean, here's one thing that's kind of nice. We're trading at 178. If you sold a 175, that puts your break even up to around 183 because you're getting a 175 strike plus the $8 credit. That's like getting the shares called away at 183. If you move this down to 170, that's like getting the shares called away at 181.45. So you're still getting like a $3 to $4 premium on top of the current price. And you're going out 24 days. This is right before earnings, which would be obviously the big move one way or the other. I don't really know what earnings is going to do. I don't care at this point. But if I was in the position at a 120 ownership, this is what I would be doing. Is I'd just be okay, selling a call, grabbing some premium. I mean, the nice thing is if you own the shares at 120, you sell this at 170, now your 120 ownership goes down to 109, right? And if price dips below 170, you can sell the 170 again. You can sell the 165, the 160. You have some wiggle room here to play around with this. And you also can keep rolling these calls out for a while. Um, 256 per leg. How are you paying that much? I pay well, I mean, I know I've got a bit of a break because of how active. How active do you think you are, Snapper? How active do you think you are? So Tasty Trade, I know they'll tell me like if a trader is showing the progress of generating somewhere between like 1 and 2,000 trades. Um, I don't think it's a month. That seems a little high. But if you're on pace to do like 500,000 trades a month, which I know seems like a lot, but that's like contracts, not just trades. Like a contract is a trade. So if you're doing 4 contracts, like basically if you're trading every day, 4 contracts, like you'll be somewhat active. Um, all you can do is ask and they can say no. Yeah, if you're active, then what you can ask for is, look, I'm active. I want to trade as much as I can. Blah, like just you tell their support team, you just email support@tastytrade.com and you tell the team, look, I'm active. I want to trade as much as I can and trade every single day. I really like zero DTE. I'd like a break in my commissions. And they'll assess your track record, not like winning or losing track record. They'll assess your activity, and they will probably cut you from like $1 commission to like 80 cents. And I mean, I'm as low as 60 cents, but I'm taking 40, 50,000 trades a year. So you just keep asking, just keep asking. But I know they're willing to go lower. They're very trader friendly. They're willing to work with traders. So you tell them you're active, and you can prove it with your activity, then they'll probably hook you up. Yeah. You can just email their support at tastytrade.com and they'll get you into the hands of the accounts team. Yep, that'll help though. Okay. So let's go back to this for covered calls. Do you want to continue to own the shares? If you, this actually seems confused. So if yes, let's do this. So if yes, do you want to continue to own the shares? If yes, I don't want the shares called away, then consider selling out of the money covered calls. So your 10 deltas, your 20 deltas. So this would be another question for Randy. If Randy wanted to keep the shares, then he goes all the way up here to like the 190 or the 195. Well, now what does Randy get for his trade? He owns at 120. He still gets, an extra, let's go to this one, like the 190, that's $1.77. So Randy takes his 120 ownership minus the $1.77 and gets it called away at 190. Right? So he makes over 70, almost $72 a share. That's great. But if price goes down, Randy's not really doing much to lower his cost basis. So again, as I said yesterday, it's like there's a trade-off, right? There's a trade-off. But because we're sitting at all-time highs, I'm telling like if I was in the shares and it's my trade, I'm probably selling like the 170. I'm probably selling the 170 because that gets me double digits on the income side. Yes, it could still get called away, but if price dips below 170, I'm lowering my cost basis now to 109. And I would do it again and again and again and again. And I would try to bring my cost basis down on NVIDIA to like under 100, under 90, under 80. And, do I think it's possible that NVIDIA hits $200 a share? Sure. We could have the run to 1,000 again. After it split, we could run back up to $500, run to 1,000. Like nobody knows. NVIDIA has such a ridiculous competitive advantage right now until everybody catches up and chips are, saturated. It just has such a huge advantage because its margins and its revenue growth are just unbelievable. So, I mean, first company in history to reach $4 trillion. It is also the largest percentage in the S&P and the NASDAQ ever, to almost 8% weighting because it's so large at $4 trillion. And people think that's a bad thing. It's like, well, I mean, it kind of is because NVIDIA goes down, it's dragging the whole market with it. But it's still a very profitable company, right? Okay, so I kind of like that trade. If I'm in the trade, I'm probably selling the 170 call. I'm going to get $11.40 for it, lower my cost base down to 109. And if it's going into that expiration and we're still above 170, roll it, right? Roll it out in time and maybe keep the strike price the same and try to get another, $2, $3, $4 out of that trade to roll it and give it another maybe 2 weeks, maybe another 4 weeks, and just try to keep grabbing some income, which lowers your cost basis. That makes sense? Okay. Yep, good stuff. Um, how about if you buy two calls at 75 delta, sell one call 50 delta? Sandy, you're talking about a zebra trade? That's a strategy. That's a zebra trade. Yeah, it's a good trade, but you got to be long the stock. The zebra trade is an options way of doing it. It's cheaper than owning the underlying. But at the end of the day, look, if you want to go deep in the money and pay X amount for it, look, I don't want to own Nvidia. I don't want to pay $180 for this stock. But if I bought the call options, I mean, what has to happen if I'm buying call options? If I'm going deep in the money, if I'm going to buy let me go in the money here. So if I'm going in the money, I mean, is this right? Going out, that's 24 days. Let me go out I guess I'll go out a year. I'll do like a leap. If typically when I buy calls, I'm going out like in time. I'm going out way out in time. Um, I don't know. Let me go out to when could things get really messy? Probably midterms next year. So like, maybe June of next year. Maybe this thing has plenty of time to rally. So if I go June of 2026, I buy a deep in the money, like 70 delta. I like kind of round numbers or like easy number to remember. So 71 delta is a 155. So it's going to cost me $4,200 to buy this call. So I buy two of these, okay, and then I can sell the 50 delta, which is a pretty much at the money trade. Well, I guess not. I don't know why the delta's way up here at 193. That's insane. Um, that's interesting. So if I sell the 50 delta, it brings my cost basis down to $20. So I pay $2,000 to basically have it's less than that actually. I'm going to pay more there. So I buy the 155s, I sell the 193s. This is going to cost me 6 grand. So it's cheaper than $17,000, but my risk in the trade is my full debit. And I need price to go up. I need it to go up. That's the trade-off. I mean, I would say this, Sandy. I like that trade after a dip or a pullback, not right now. I don't want that trade now. And I could be wrong. Like Nvidia goes up to $200 and I'm like, oh, I look stupid, right? But if we have a dip or a pullback, I'm way more excited about positioning for a dip to buy as opposed to buying the highs. So based on the mechanics here, I mean, buying the 155, which is an in the money call, and then selling the 50 delta, I'm still going to pay, $6,200, but that's like a third, just under a third of what it would cost me to buy 100 shares. So it's cost effective. It trades synthetically like it is a long call. It's like a long stock option. I'm sorry, it's a long stock position. So if I build this out, I'll build this on option strat really quickly. I'll show you what this looks like. So if we build this trade out, just do a long call. So build the call and sell a call. We go to Nvidia. I'm going to go out to June of 2026. So 324 days. Yep, that's correct. And then I could buy the 155. So I buy the 155. And then I'm selling the 190 there. So this is roughly what the trade looks like. Okay. So that debit is around $6,000 versus if I paid $17,800, that's what it would be for 100 shares. So you can either buy 100 shares and spend almost 18 grand, or you can create this trade, which is called a zebra trade. And it's just a dumb name for a synthetically long stock position. Okay. Now, this is the nice thing about this one, because if you've ever heard synthetics, right? If you heard synthetics, I could also buy a call and sell a put at the same strike. And it looks like this, but I have unlimited downside risk. With the zebra trade, you have max loss. So you can cap your loss on a zebra trade versus having the synthetic. So I'll show you what that means. So the zebra trade, the most I can lose here is $6,100. But if price goes up, my break-even point is the debit that I pay. So we're trading around 178. I need price to go up and cover the cost of my trade. Okay, my break-even is around 185 and I start making money. So anything above 185 is unlimited upside profit, just like you get in a call option, just like you get with the price appreciation of the stock going higher. So there's plenty of capital to be made. Okay, if I switch this to do, let me take this down to 1. So if I buy a call, and I'll just do it from current price there. So if I buy a call at 178 and I sell a put at 178, this is synthetic. So the nice thing about this one is it only costs me $655 to get long the stock, and it looks exactly like me buying the shares. So if I buy the shares, it goes up, I make money. If I buy the shares, it goes down, I lose money. That's the put risk. This is all put risk. Okay. If I buy the call, it's all upside potential. But this is a way to basically do, if you're bullish on something and you don't want to pay an arm and a leg for it, do a synthetic play like this. So if I went out a year and I buy the 178 call, sell the 178 put, that cost me $688. If I wanted to do this, I can make a little bit cheaper, right? So I'm going slightly, like I'm going 60 cents in the money on the put side and 60 cents out of the money on the call side. I only pay $600. Now, there's risk on this trade because obviously if the price drops, I'm on the hook for that naked put the whole time. So the risk is if this thing went to zero, I'm risking 18 grand, right? So if you, I'll say this, if you have a margin account, synthetic options are really, really effective, but you want to have a strong conviction of that trade. For example, this trade is only going to cost me $2,700 to place because I'm using options on a margin account. Okay. Versus if I did this on an IRA account, I would be buying the call for the full debit and I'd be selling the put with the full risk and cash requirement. So that's a very expensive trade with a cash account. But with a margin account, the buying power is very affordable. Okay. So if you ever want to have this as capped risk, that's what we're talking about with the zebra trade. Which there's like zebra stands for something. I don't know what it is. I don't know what it is. Like zebra trade is a zebra trade acronym. I know it stands for something. Zero extrinsic value back ratio spread. I'm never going to remember that. Okay. So the zebra is an acronym for you basically have a synthetic position like you're long the stock, but you do it at a fraction of the cost and you cap your downside. So it is a really good trade. It's a good way to express how you want to get long the stock, but also do it with defined risk. Okay. So if you like a stock that much, zebras are great. And what does that trade look like? At rule of thumb is you buy two calls at a 70 delta, you sell one call at a 50 delta, you reduce the size of the overall debit, and if price goes up, you get all the upside gains with capped downside risk. Yep. So way better on the risk profile with a zebra versus the synthetic. Okay. Now, I'll add one more to this. We talked about this a little bit last week. I'll just revisit it today. We got a few more minutes here. The collar trade, and I'll go back to a couple points here on selling calls. The collar trade. The collar trade is if like for example, I'm starting with these accounts fresh. These are going to be like my first couple trades. If I want to have some exposure on the S&P, the Nasdaq, the Dow, the Russell, I'm probably going to start out with this trade just some options, doing some income only, and then start adding my allocations and getting a little bit more creative as opposed to just buying shares right now. I really don't want to buy shares right now. So what I'm going to do is look at income trades first, starting with options, and hopefully not get them assigned, but if they get assigned, it's going to be at a massive discount. So, I'll probably start looking at really simple trades like we take in waterfall income and do, this is a portfolio margin account right here. This one is an IRA account, so I need to treat them very differently. But that's the idea. Okay. So if I look at the collar trade, let's say that I don't have any shares. Okay. I don't have any shares of NVIDIA. And I wanted to say, you know what? I hear NVIDIA is a good stock. What do I do with it? Well, I can buy the shares right now at 178. But what I would do is I would look at maybe doing like a 178 call option and then buy myself some protection at 170. So if I sell the call at the money, I buy a put slightly lower, I still get over $10 credit. So let's do the quick math on this. So if I do a collar trade, okay, so this is just an example. So I buy 100 shares at $178. So that's the current price of the stock, or 177.92. So I buy the shares at 178. I sell the 178 call, and then I buy the 170 put. I still get $10.30 credit on the collar. So now my break-even price is 160, what? 167.70. Okay. Because I get $10.30 credit. So that's my break even. If NVIDIA is greater than 178, the shares can be called away, or I can roll for more time. If NVIDIA is less than, let's say 165 or 160, the long put will help with protection and lowering the cost. Then I will calculate new break even and add another collar. Okay. A collar trade is, to me, as a trader that's always risk focused, a collar trade is the best of both worlds where I can still get premium, I can still lower my cost basis, but I can still have downside protection. I think to me, like that's the most important thing in this environment. Like we're sitting in all-time highs. There's always that risk of something that pulls us back. Individual stocks, indexes, there's always that risk. So, I want to buy more stuff at dips. I want to get pullbacks. right? So a collar trade helps me kind of, sleep well at night knowing like I've got downside protection if something silly happens, but I also get the shares called away or I can just keep rolling for income. And you're going to get less income if you do a collar trade each time because you're adding the debit side. So I sell the call, which is a credit. I buy the put, which is a debit, but I'm still walking away with a net credit, which does help me lower my cost basis. And if I did collar after collar after collar, I'm still lowering my costs. I still have downside protection. But there is a point that I decide where it's like, I think the stock's going to keep going up. Then I stop adding puts, right? If I feel more confident, like we've hit a bottom, we're starting to trend higher, the market's going higher, then I really just focus on selling calls and not adding the put each time. Make sense? All right. By the way, who's selling some of the daily profit play stuff this morning? We're starting to get a little bit of a leak. We're actually red on the day right now. Um, just revisiting before we wrap things up here in a few minutes. But let's get back to this. Any questions? So a little education today on covered calls. Rolling is, I mean, we'll do some more details on that. I still have to roll. If you want to come back to my 3 p.m. session today on YouTube, I'll spend some more time talking about rolling calls because I need to roll Tesla by the 1st, which is going to be Friday. I need to roll IWM and UNG and JD by the 1st. The reason I rolled the SPY already because it was a July 31st, which is Thursday. Okay. All right. So let me just finish up here for a couple more minutes. I'm really hoping that Kyle stuck around today. I feel bad if Kyle's like, I'm out. I didn't get an email from him. Hopefully we see Kyle tomorrow. I'll call him out tomorrow, see if he's there. But I mean, again, I appreciate the community stepping in and just trying to support the cause. It's like, look, we're trading here every day. And I mean, this, like my prerequisite is if you're comfortable navigating the broker platform, look, we're trading in a zero DT environment. Things move pretty fast here. If you want to get like filled, then we're going to have to be in trades within 30 to 60 seconds. There's going to be some 5-10% or 5 or 10 cent fluctuations here and there, but I feel bad that there's the discouragement of like I didn't get filled. I mean, then recenter the trade. I'm not always getting the best fill. I'm not always perfectly neutral. So it's just knowing the mechanics of the trade and then being confident with it. So there you go. Mark says just exited the late iron condor for 40 cents credit. Very good. Let me see what it's trading for right now. So my $1.40. Okay, $1.40 is trading for $1.40. Like I'd be back to break even if I didn't do anything this whole time we've been talking. I'd be back at break even right now. And I see price, and price has been kind of slowly filling my gamma levels to the downside. We've talked about some of the lower strikes here. Now I will be mindful of, remember the bottom that we talked about today. Okay, we still have the VIX at 14.9, so it's going up a little bit higher. Just do the numbers here. A VIX at 14.99 means we could go about 0.94%. So we opened up based on this level. This is my open or the close yesterday. If we go down 0.94%, that's still around the 63.30. But remember, price today, this is the high. That's the high of the day. So this could be adjusted. If you're looking for a bottom today, start with the high and go 0.94%. Now we're talking about a bottom around 63.50. Okay, that's a big difference. But the reason why that one works is because we started out with a gap higher, and we have to take into account that the market intraday could move that full like into 0.9394%. That makes sense? So do we get to 63.30 today? Probably not. Do we get to 63.50? Maybe. We might get to 63.50 today. So I'm going to try to do something here, make the numbers pretty simple. I'm going to go after, I'll keep the numbers simple. I'm going to sell a put at 64. I'm going to buy a put at 50. And I'm going to try to get this thing filled for like 47.50. Again, it's a shot in the dark. If the VIX spikes up a ton, then maybe this takes, but it probably won't. I'm only going to risk $250 in the trade if I get filled. And if we close above 63.52.50, I can make, every dollar above that's $100 profit. Okay. Bill says I'm still trying to get filled yesterday. SPX mid bouncing 120. Try 120, Bill. I mean, VIX might have been up a little bit today. You put your 17 delta rather than lower. I did a 13. It was profitable. Higher delta is more premium. Higher delta is more credit, Larry. So if I started out selling like a 20 delta, I'm going to get more credit. If I sell a 25 delta, more credit. I don't like to go too much higher than 20 deltas. 20 deltas kind of my sweet spot. 15 deltas ideal. But 20 is like you want a little bit extra juice, a little bit extra premium. 20 delta is pretty good. 10 delta, you're going further out of the money. You're going to get less credit, but you do have the higher probability. All right, let me get your question there, Bill. The waterfall income trade that I put yesterday, I did post it in one click. Yeah, I did. They were both posted. Let me double check. They should have both been posted yesterday. Yeah, I posted SPY and I posted SPX. They're both in the tracker as well. So trade number 9899 and waterfall. They're both posted. Okay. Should be good there. Yeah, so trade number 9899. Those fills. So SPY was a debit spread. SPX was a credit. If you can't get filled at 125, you can try 120. Maybe let me throw it in here. And I'm not done. I'm gonna go just I mean, I don't have anything at 11. I'm not in profit panel today, so I'm gonna go a little bit longer if you're cool with it. What I will do is let's go waterfall here. Just gonna build the trade out. So we went out to September, did the weekly expiration, and I was going on the call side. I bought the 66.8. Here we go. So buy, sell, buy. Okay. So I'm showing a mid price at 130. I mean, I got filled at 125 yesterday. If it doesn't take at 120, I mean, I could do 115. I could also do this. I could move all these strikes up one strike, and now it's offering over $2. So instead of my 66.80 by 90 and then 67 by 67.20, I go 75.80, then 90 and 110. It's a bit more, it's actually quite a bit more risk on the trade because somehow I get that 10 wide versus 5. Actually, the trade I like this. I like this better. I like the trade that I took yesterday better. I would just say, being willing to settle for like a 110 or 115 credit. I'd still take that trade today. I still like that trade. I would just take, maybe 5 or 10 cents less. Okay. Okay. So the SPY trade, it's check your tracker. Go in your classroom for waterfall income. Check the trade tracker. It's trade number 99. Let me go into one click right now. I'll show you. It should be in there. All right. So let's go waterfall. So alerts. Okay. So that is the SPX one. Looks like it didn't get pulled. I just emailed the team. Let me go back to the tracker here. Trade tracker. There it is. That's the trade that I took yesterday. Trade number 99. There's your SPY trade. So they're the legs. And it might actually be even a better trade. This is going to be cheaper if you take the trade today because we're sliding a little bit lower. But a 630 by 635, similar debits. I'm going after I'm paying 2/3 to get 1/3. And I'm looking to see if by January we go to the all-time highs again. Okay. Yep. So it's in the tracker. I'll get it. I don't know why it didn't get posted yesterday. I just messaged the team. Okay. We'll do some final thoughts here for today's Technical Tuesday. I'm just going to chill out and kind of wait and see how the day unfolds. The market might still be relatively calm today. Poked all-time highs again. Came back. We're actually red on the day slightly. But I would venture to say we're going to stay somewhere in here as we come into FOMC tomorrow. It'd be a bit of a shock to see the market slide lower anything can happen. I'm watching the VIX. We're at 14.89. Like it's going to be roughly like a 0.9% move or 1% move. If things get nasty to the downside, maybe pushing like a 1% move to the day before we get some bounces. Okay. All right. Let me get some final thoughts here on covered calls. Do you want to own the shares? If yes, then you want to do out of the money covered calls. Okay. Um, if no, if you don't want to own the shares, meaning I don't want to keep the shares, I want them gone, I've made enough money, then you'll do this. Then consider selling at the money covered calls or in the money covered calls and simply lower your costs, collect the premium, and let the shares be called away. Okay. You can always restart the position. Okay. So when I roll covered calls, I mostly roll for credits only. Okay. I would only consider rolling for a debit if the math still makes me net profit. I'll think of an example. MicroStrategy is an example. When MicroStrategy was, I'm trying to think, I started buying that thing at like 395. It lowered my cost basis down to like $300. Even, I mean, my break even's like 250 or something ridiculously low in that stock now. Doesn't matter. Anyway, price got way ahead. Like price was up like 50, 60, $70 of my covered calls. And so I was willing to pay, you know, $4 of a debit to roll it, but give myself $10 of profit potential. So I'm rolling it for a $4 debit to grab an extra $6 of profit. It still helps me make more money. But mostly when I'm rolling calls, I just want to roll for credit, roll for credit, lower my cost basis as much as I can. And when I'm happy letting the shares go, I'll let them go. You can always start again. If you're like, well, I'd like to, keep the shares, or I don't like buying higher. It's like, well, then never let the calls go. Like just keep rolling them. But at some point, if the market runs too far ahead of you, you're not going to be able to roll it for much of a credit. And that's when it's like you just kind of have to let it go. If the math doesn't work, just let the shares go. You can always reestablish a new position where you buy the shares and you can do a collar trade, which is you sell that call, buy that put, have the downside protection, still chip away at the cost basis, and make some net profit. That makes sense? All right. Okay. Any questions for today? We'll try to give Kyle some love out there. Hopefully he comes back tomorrow. We'll see. Trade less in the day, a little bit more time on covered calls. We'll spend some time this afternoon. I do have a couple rolls, so come back and see me at 3 p.m. for my YouTube session. I've got to roll Tesla, IWM, UNG, and JD. UNG is a diagonal spread. JD is covered calls. Russell, I'm just rolling in the monies. Tesla, I'm rolling in the monies. Intel is another roll. I want to look to roll those out as well. Try to go, at or maybe slightly out of the money on Intel since that pulled back. If anything fancy happens today, I'm looking for maybe a potential bounce. I'm not going to get too picky. I'm not going to like buy the lows necessarily unless I'm probably going to do this. If we go down to 63.30, I will do this. If I go 6,400 to, let me cancel this trade. I might take on, I don't know, I might get a little fancy here. I'm going to go sell put at 64, buy put at 63.30, try to get that's 70 wide. I'm going to try to get $65 on that trade, which means I'm still risking $500 to make anything above 63.35 is going to be $100 per point. So if we close at 63.36, 7, 8, 9, 63.40, that's up to $500. Okay. But I don't think I'm going to get filled on the trade unless price is going to fall hard all day and the VIX is going to jump up. I will still be mindful of that potential bottom with the VIX increasing in value. Okay. So even if we hit that level today, let's say we go to 63.30, that means we moved about 1.2%, which means the VIX would go up and I could kind of have that cushion where the market can go 1+% to the downside and I can still grab kind of the bottom there. But don't be surprised if we make, if we just hold around like 63.80 or 63.70 zone, we'll probably stay somewhere in there. I don't see there being too much damage below this level. Okay. But I'm trying to think this morning if we did a reverse iron condor, if that also would have been doable. Current price, 05, maybe the like 6,400 by 15. Yeah, that would have been okay. We could have done a directional trade today as well. So if we stayed out of the dead zone, that would be trading for, maybe 40, 50 bucks as well. So we always got options. But the good thing is out of the trade with the winner. And if I'm still in that trade, I would be being threatened on the put side. So I'm probably not profitable on that trade right now. This trade is now trading for $1.60. So I'd be upside down about $15, $20, which isn't the end of the world. But obviously if price is going to fall below my blue line and stay below my blue line, now I'm taking on risk. So all good. All right, I'll let you go. We went a full 2 hours today and then some. So thanks for being with me. And we'll talk soon. I'll see you this afternoon. All right, bye.